Hey folks, welcome back to Soaring Profits. As always, my name is Patrick. I have my guest host today with me,
James, guest
as
host
always.
is kind of light. I would
Wow,
say that I'm like co-host at the very least.
you're a guest today. You're going to be the camera guy. So, folks, we had quite a day in the world today. We had the CPI, the Consumer Price Index report, finally hit, and it's a mess. You're probably feeling it at the gas pumps. You're probably seeing it in the grocery stores. But what we're going to do today is we're going to take a look at it a little bit deeper. We're going to deep dive it a little bit. And this is the boring stuff that nobody really likes to do, but we're going to try to make it a little bit of fun and teach a little bit about it while not driving people absolutely that they're watching pain. So, one of the first things that we want to pull up here is there we go. I'm going to share my screen. So, US stocks end lower in choppy session after data shows inflation running hottest since 1981. Now, James remembers this because he's certainly old enough to, but the
Oh,
rest
I'm
of us
definitely old enough.
were probably not even born. I know that I wasn't. 1981, when we saw inflation like this, a lot of you folks, your parents probably, or even your grandparents in some cases, remember interest rates soaring. People were buying homes, they were buying cars, they were financing money at interest rates in the teens, 15, 20, 22, 23% interest. Now, I want you to think about that right now, okay? We have mortgages right now that are 1.5%, 2.5% interest, okay? We are in a crazy time right now. What we're going to do today is we're going to take a look at it as a number that we're looking at for today, for the midterm, and a longer term. And what we're going to do is I think we're going to be kind of satisfied with where we are and what the Federal Reserve in the United States is doing to slow down some inflation. So the first thing that we're going to look at here is the SPY, which is the S&P 500. So it is a 500 different companies in the United States, and it tracks them. So today, as we see here, we had a bit of a choppy day. So we started off here, we got the report this morning, and everyone was like, this could be a buying opportunity. If the market is going to crash, everyone, where's the fear? So people started actually buying in the morning. But as you can see, after the day progressed, we closed substantially lower. We were down, 0.5% today to 438.29. Okay. So the S&P tracks the 500 biggest, most, I guess you would say, notary stock names in the market, right? So another one that we can look at here is the Dow Jones. And this is the Dow Jones Industrial Average. Same thing, had a bit of a run up. So let's dive into what the CPI is. The CPI is the Consumer Price Index, and it takes into account what people are spending money on. And this report takes everything from prices of butter, prices of meat, food staples, right? It takes automotive sales and what the difference in price from last report to this report, house pricing from last report to this report. And it's kind of dull, it's kind of boring, but it actually hits us at home. You're probably noticing that the price at the pump is rising. In the last little while, we actually did a talk about this, is that we thought that we had hit an inflection point, we had hit the peak, and we were starting to pull back a little bit. I think that's what we're seeing right now. But why is that? It's kind of because we've hit peak fear in the Ukrainian situation with Russia. We were talking about nuclear war. Now, all of a sudden, that fear's dissipated a little bit. They're like, okay, we didn't get bombed. We didn't go in and we didn't start World War III. But now what? So in the short term, we're seeing a little bit of inconsistency. They're up, they're down. They're trying to find that happy median, okay? So the one that I want to pull up with you folks today, and we're going to do what's called technical analysis on, and this is the Invesco QQQ Trust. And what this does is this follows the NASDAQ. The NASDAQ is a market that follows tech growth, okay? Why is this super important? Tech growth, growing companies, pick one, name one, right? You got Twitter. There's a lot of stories going on with Twitter right now. Tesla, a one that I love and one that we'll get to here is Palantir. Palantir is one of my long-term holdings that I think is going to be a fantastic company. But tech companies are really upfront startup, heavy in debt and cash. They just eat through cash as fast as they possibly can. So what this does here is this is a stock pattern, a trading center, where we can watch on Trading View here. This goes back all the way to August of 2020, okay? So what do we see here? We see a lot of chop and an upward trending market, okay? We get here until January, the 4th of January, 2022. That's pretty recent history. And what did we have there? We had the Federal Reserve coming out, scaring people a little bit, and we also had the fear of war, okay? So January, we see a nosedive, okay? Again, some consolidation, and we've had a great run here the last little while, right? We ramped up and now we're pulling back down. So what we want to do is we're actually going to do some technical analysis live for you folks so you can see it. It's going to take a minute or two and I'll show you exactly what we want to look for here. So the first things that we look for are these are what we call these high areas are resistance. So it's you got to think of it as like a band. It's a big chart, right? It's a big trend. You have at the top and you have the bottom. Okay. You got to think of it as a channel. So up here, we bounce off of these prices and then we fall. We bounce off of these prices and then we fall. Okay. But what we're doing while we're doing this is we're creating trend lines. So let me chart a couple really quick for you here. So we're going to pick the height. So this obviously is a height. And we're going to connect as many points along this as we possibly can. Okay. Now we're going to do the same thing on the bottom of that. And we're going to see how this trend fits between this and where and when we broke down. Okay. So as you can see, when you connect these, if you were around here, right? If this trend had continued on, let's move along here. If you knew that this was a trend that we had been following, you know that once we get into this area, this is starting to get into an overbought area, and you can basically start to see that there's going to be some resistance there. People are going to start to sell, okay? Well, and what happens? People start to sell. We go down here to the RSI, which is the Relative Strength Index. It has reached its overbought area. We saw this on another one of our videos, right? Our overbought area. And then what happened? Price action goes down, okay? RSI weakens, and we get down to the bottom of the RSI. This is oversold. What do? It's oversold. It bounces again off of our platform here, our bands, and it consolidates up again, okay? Hits the oversold, and then bounces back, okay? So what we're doing here now is that we are seeing a pattern, a trend, okay? So now what we're going to do is we're going to get to here. What happened? We had a world-changing event. We had Ukraine. When you have war, you have a change of regime, you have a change of... Oh, I'm froze. Hang on a second, folks.
Tech. So would Russia have anything to do with that? Like you keep mentioning Ukraine, but the all the restrictions that the governments have put on Russia, like stopping them from producing oil, selling oil, and I heard they impeded them from using commerce.
There we go. That should be back there. Sorry, guys. I apologize.
Is that what you're talking about? That those levels would
Absolutely. So you can see what we have here is we start to get chop, right? So we start to get consolidation and then chop. And these events here, when we started talking about inflation around the beginning of December, that was when we started peaking out. Okay, oh, we're worried about inflation. The big fall happens when, oh my gosh, we're going to have a war in Russia, whether it's a cold war or whether it's going to be a hot war. Around this time, oh no, this is going to be bad. And why we can tell that an event happened is because it's right in the middle of these bands. It has no reason to rise or fall. So what happened? Why did it fall? Something happened here, okay? And I've talked to you folks before is that when you start understanding charting and you start understanding the patterns that we're building here, you can start taking into account world events, okay? So as we broke down here now, we've created a new channel. We've fallen out of this channel. It tried to get back into it, but it failed. So now we've got a new channel, okay? But there's not enough data or information yet to really properly chart this, right? Well, there is and there isn't. So what we're going to do now is we're going to go back to highs and lows, and we're going to chart it through a slightly different way of doing things. So we're going to take highs and lows. This most recent high is going to get a bar across it, okay? This most recent low is going to get a bar across it. See how we're building a new channel, okay? So this in our fall down here and our run back up, where does this start to look as we go back in history? We see that this actually means something back in August, right? This actually meant something back in July. Now we go back to the support aspect, not the resistance, but the support. And it was a support back in May. Now we're going back in history and using historical data to try to ascertain what this is going to do from now on. This is the future. Now this, folks, is where you can make a lot of money, okay? If you can learn how to chart using technical analysis, as well as the day-to-day news, the day-to-day real news, not the fear, not all the media that's pushing things.
Yeah, like
you
Fox News.
Right, yeah, whatever you want to say. But I'm going to garner that we are going to have a run back down, and we're going to test. So there's another tool that we can use here that is called let me find it here. It's a retracement, a Fibonacci retracement. Okay, so we go to the peak. Let's use this one. This seems like a better peak. Okay, and we're going to draw this back to the new bottoms. Okay, now that was just a tool that I pulled out of my butt. This is the Fibonacci retracement. Big name, long name. What it is that when stocks fall, they start to hit within certain patterns. Okay, I'm going to try to blow this up a little bit for us so we can get a little closer. There we go. I want you to look at this is the high. Okay, this is the low, but I want you to look right where they keep bouncing off of these percentages, right? It becomes kind of eerie how close they fit that, right? I can extend this out and we can start to make some predictions of where it's going to go. So this is today's price that we got. What did it hit? It hit this 0.236 retracement, okay? And what we're going to see tomorrow is either it's going to break below and continue down, or it's going to break back up and run back into this 0.382, okay? So now what we do is we don't have big movements like this. We can start trading smaller day movements, okay? So what I'm going to say is that the CPI data today gave us peak fear. People were terrified today of what was going to happen in the markets. And what happened is we saw the run. We saw the negative day for the NASDAQ. That's what we're looking at right now. We saw that, okay? It was down almost 0.5%. What I'm going to suggest is that tomorrow that we're going to see a bounce off of this new lower support, and we're going to come back up and start moving back up towards this. And the reason for that is, folks, is that when you hit that peak fear, then usually you have a great buying opportunity. Are we going to go back to nuclear war was on the table? Like, do we still think that nuclear war is on the table? Well, maybe, but we've had some time to think about it, and the market recovered pretty drastically. That's a pretty drastic move in a very short period of time. So as we sit here now, we have some choices. I don't think we're going back to nuclear war fear. I don't think we're going back to $130 a barrel fear. I think we've moved beyond those things, and the market is going to take that into account. So as we look to retrace back up, I would look at a price you could buy in approximately now at about 339, and I would say that a good take profit margin on that would be 351. Well, what is that? Like, how much money would that make you if you were buying that, trading that move? Okay, so we use this tool here, and we move it up to there. And it's a 3.88%. Let's call it 4% for lack of a better term. Percent move in a week or two. Okay. If you got $1,000 involved in this, that's not bad. If you had $100,000, that's not bad. But if you got a couple $1,000,000, 3.88% in a week or two, very safe. This isn't going anywhere, right? Like there's no risk that Tesla is going to have a car explode and it's going to fall apart. You can trade these ETFs. You can buy them, you can trade them. These ETFs are what are called electronically traded funds, and they're traded every day, right? This is something that you can go out and you can buy for yourself. Again, I'm not a financial planner and I'm not your financial planner, so I don't know your risk threshold. But what I'm saying is that in a down market, in an up market, there's absolutely ways to make money if you know how to do this sort of thing. So what we're doing here is showing people a way to make money. We're showing the real estate. We're showing different things, different opportunities, and we're glad to have you. We appreciate you coming in today. And as always, thank you for joining us at Soaring Profits. My name again is Patrick. We'll see you the next time. My partner today,
James, holding the camera.
Holding the camera guy. But thank you again, and we look forward to seeing you. Like, share, and subscribe. If you know anybody that's in a position that could find this useful and find what we're doing useful, send it to them. Let them know what they're doing. Until the next time, guys, thank you so much, and let's make some money together.
Hey, James from Soaring Profits and Pat over here. Aren't those two great looking cartoons?
Now, with that being said, folks, obviously we are not financial advisors, and we're certainly not your financial advisors. We don't know your risk tolerance. We don't know if you got money in the bank. We don't know what your situation is. So when we're having these discussions, we appreciate you tuning in. However, have some discretion. If you make $1 million with us, we're glad to have you. If you lose $1 million, that's on you as well, folks. Let's work together. Let's make some money, and we'll go from there. Thanks, guys.